Eric Mother with Mother.com for the weekend of July 16th and July 17th, 2016. Let's take a look at markets here with about 2 hours to go before the market close. This is how markets are trading. Pretty much, let's call it an unchanged day. So let's take a look at those charts. And we begin with the Nasdaq Nasdaq Weekly. So the Nasdaq Weekly, I still think that we are coming back to test this line. Even though the market is trading well this past week, we see that this line has yet to be materially violated to the upside. So this could be a problem week to week if the market cannot move above that line. So let's keep that in focus. Resistance on this level here might suggest a pullback is going to be the next swing trade. Also take a look here at the previous break, and this is something we've been talking about for many weeks. So once we broke through here, and this break so happens to be the break of the highs, we draw a line from there, and you can see that it's been a problem here with uniform activity rejection for the highs there, double top rejection for the highs there. We touched that level here for the highs there, and of course we saw this pullback. So we are coming back to test that same level. On the weekly for the Nasdaq, this could end up being a problem. Otherwise, market bulls would like the market to confirm strength by trading above those two lines. If you take a look at the Nasdaq Daily, you can see we've made an improvement in highs here recently, but this has come on the same negative divergence line, as you can see. In fact, there's also another resistance line coming off this recent break. So the break right there brought the market off these highs. Every time since then that we've come and hit that line and stalled, the market has pulled back. You can see we stalled on the red line here for those highs. We stalled here for the highs there. Now coming back and showing again what looks like double bottom or double top rejection on the same line. So another double top right there, day to day, suggesting that by itself this chart might be predicting that over time in the coming days the next swing trade for markets is lower. Otherwise, market bulls would like the market to move above this price range and also move above those two lines of resistance for this market to see higher prices. So either we can clear these resistance levels or we confirm the resistance and we start seeing a pullback. Now on the monthly chart, and this is monthly chart data going back to 1990, we just have to observe here because the Nasdaq and the S&P 500 have gone to fresh highs, so they are trading at fresh highs. It might also make sense that eventually the Nasdaq is gonna have to make fresh highs, and here's the reasoning. If you take a look at this long-term monthly chart, every time we have uniform activity bounce at the 50 level, the market goes on to record fresh highs. As you can see here, the market went to record fresh highs. It bounced on the 50 level here. The market would go on to record fresh highs after that pullback. It bounced on the 50 here in 98. The market would go on to record fresh highs, and on and on. It bounced again here. Market would go on to record fresh highs. Bounced on the 50 here. Market would go on to record fresh highs, and you can see here same thing, the market would go on to record fresh highs. And recently you can see this double bottom support at the RSI 50 level. The market would go on to record fresh highs. It bounced on the 50 RSI level, and again the market went to fresh highs. So here we see that the market did bounce on that 50 RSI line. So support right there might suggest that we might have to see the Nasdaq pushing to fresh all-time highs. So that's the scenario here. It would make sense because that would be consistent with the SPX. So take a look at the SPX monthly, and I'm not gonna go to each instant, but if you take a look at the last 3 times it's been on the 50 here, it has gone to record fresh highs right there, recorded fresh highs, bounced at RSI 50 here, went on to record fresh highs after that, and over the last couple of months we've hit this twice and guess what, we are trading at fresh highs. Same thing with the Dow, and I'll just put the Dow chart there, and again you can see that we bounced most recently, and you can check this for yourself at the 50 level with uniform activity, and guess what, we are at new highs. So the Nasdaq could also be the next one to do the same thing. As far as the short-term charts are concerned, take a look at the Dow Daily. Here, nice highs, but we are coming back to test the top side of the daily RSI, and also coming back to test the prior break point. So that break point right there began the most recent slide. So this break brought the market off the highs there, and of course we know we had a pullback from there, and so we are coming back to test that same level. So those two lines there, the red and the blue, could offer the market some type of resistance. In fact, this is confirmed by the Dow Transports on the weekly, and you can see that the Dow Transports, after a nice week, pretty much what it's doing is coming back to test the highs on the weekly RSI. So right here the market is going to have to decide whether it can hold above that line. Otherwise, resistance on this line here might suggest that the next meaningful swing trade is going to be to the downside. Also on the Dow Transports, if you take a look at this break in the RSI, the break corresponds with prices coming off this break this week sometime in March of 2015. So we draw a line from there, and since then the market's been finding it very difficult to hold above that line on the Dow Transports. Most recently we have double top uniform activity rejection for the highs here and here, and now we are coming back to test those two lines, the red and the blue. If market bulls want to move this market higher, they need to clear that resistance by moving above those two lines. Otherwise, confirmation of resistance on those two lines suggests that week to week we can start expecting a pullback. In fact, take a look at the Dow Transports, just like the Dow itself on the daily. If you go back and figure out where the break took place on the daily recently, it was right here. That RSI break brought the market off the highs there, and since then it's been a struggle to hold above that, and just throw it somewhere there. You can see that here we got rejected for the highs of April. We are coming here and we are already showing that this could be a problem because the market is responding to that line with a down day on Friday. So as long as this is resistance on the daily, one can continue expecting a pullback day to day. Of course, there's another layer of resistance based on the price. If you take the most recent daily closing highs, you form a straight line like that. So this is also looks like it is showing some type of price wedge rejection right there. So the market needs to clear the price resistance and also the RSI resistance if it is to see higher prices. So to summarize here, as long as the S&P 500 is above the prior 2015 all-time monthly closing high right here, as long as the market is breaking out, you really have to be careful here trying to play the market short, because sometimes breakout markets can really accelerate to the upside. The level here that the S&P 500 definitely needs to hold above is the same number. We've been watching for a breakout or failure to break out. Right now the market is breaking out, so we have to assume that there's more in the tank. Now, as long as it is breaking out, markets are good. If for some reason the market fails and trades back below that 210739 level, if it fails to hold the breakout, then that's when you can turn bearish. For now this looks good. And for the Dow, same number we've been watching over many months going back to last year. So the Dow also is breaking out very nicely, and so the bulls here definitely are in control, and the level to watch here for the Dow is 18132.70. Anything above that is absolutely bullish. Okay, and for the Nasdaq, as mentioned here, let's not be too surprised if over time the Nasdaq also joins the Dow and the SPX by breaking out to all-time highs. For the Nasdaq, the level to watch is 5,128.28. A breakout here is exactly what the bulls want to see, and failure to break out is exactly what the bears want to see. Otherwise, for subscribers, be on the lookout for part 2 of this weekend's market analysis video, where I should have some ideas for you in terms of stock picks and potential breakout ideas, maybe some rebound ideas too. Eric Mwathe, enjoy your weekend. Good luck, peace, and blessings, 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 blessings. I am out. Mwah.